Hello and welcome to TA for Traders. It's Thursday the 21st of December. These are the last videos I'm doing this year, so I've got my Christmas sweater on and I'm covering the most popular subject matters, asset classes that people like looking at. So in this video I'm looking at the USD against the CAD, US dollar against the Canadian dollar, which is a FX cross known as the loonie. What we'll see is that the tax reforms in the States, not only did they hit bonds yesterday, they also hit the dollar. We've seen dollar weakness. However, it does remain in its daily range trading formation. It's towards the lower boundary, but it's still in that range trade. However, there is negative momentum. The moving averages will roll, and it'll be a surprise if there isn't further dollar weakness. Let's look at those charts. So looking at the weekly picture, and you can see that we're in this range trading picture on the weekly. Looks like it's going to be a pincer formation between the downtrending 50-week moving average, which is that blue line, and the rising 20 and 200. The 20 is the yellow line, which is moving back up, and the 200, which is the red line. Pincer formation is when we get a movement between the two moving averages until it reaches a point and then we get a break. But we can't see at the moment which way the break's going to be. And actually, excuse me, it's going to sneeze. Excuse me. Sorry about that. We don't know which way it's going to break, and at the moment we're at the early stages of this consolidation and range trading pincer formation, so it could continue for quite some time. Momentum wise, we're neutral. The RSI is at 49.04 and is tracking sideways. And the moving average, the MACD are moving up, but they're still below zero. Moving on to the daily, and you can see the breakdown that we've had in the last couple of days with the dollar. That's taken it back below the 20 and 50-day moving averages and is taking us towards the lower boundary of this trading range. For the trading range to be broken, it'll need a break below the low here of the 5th of December, which is round about the 126.31 level. So keep an eye on that. As we remain below the moving averages, they will roll, and that could very well give the needed push to push the dollar lower and below that range trade. If it does fall below that 126 level, then the next support is seen down here, which is at 124.32.5. Moving on to the short term, looking at the 4 hour. Here, obviously, because we're just looking at really at the recent range trading, the fall looks a lot heavier than it was. But you can see it did take us down below the rising 200 moving average from this chart. The 20 and 50 are both falling quite heavily. The 20 will create a bearish cross on the 50 probably tomorrow, so that will add weight to the downside argument and would give very severe resistance if the dollar were to bounce back up. On the volume, you can see that we are having quite high volumes on the sell days, which reinforces that picture, and the MACD and RSI are both indicative of negative momentum. Okay, looking at the support and resistance levels, we've got resistance at 128.06 from the 20-day, then from the 200-day 129.22, with support from the 5th of December 126.238. That also marks the lower boundary of the range trading, and then there's support at the 20-week at 125.90. So that's been TA for traders, having a look at the loonie foreign currency cross, which is the US dollar versus the Canadian dollar. The key takeaways from the video should be we're breaking towards the lower boundary. The trading range does remain in place. Momentum has turned negative. The daily moving averages will turn, and there'll be a surprise if there was not more downside weakness for the dollar. Many thanks for watching the video. Please do remember these videos are for information only and are my opinion, and they're not an investment recommendation. Please do read the disclaimer. I'll be back in the new year.